Imagine this, you're retired. You're living off of your investment account. Every month, when you need it, you draw from the investment account to live. But what happens when the market goes down? Your balance on that investment account is also going down. You know that it's not wise to sell investments, to draw from this investment account in a down market. So what can you do when the market is down and you need income? A reverse mortgage might be the answer. I know what you're thinking. A reverse mortgage is bad, it's dangerous, and you shouldn't be doing this. I used to think the exact same thing. I thought, similar to Dave Ramsey, that reverse mortgages, all of them are bad and evil and are not good. Several years ago, reverse mortgages were a bad idea. You could get a reverse mortgage and then potentially lose your home. That is a scary thought. And beyond that, there were a lot of people that were in the mortgage industry that were taking advantage of elderly folks and forcing them into reverse mortgages when they never needed them in the first place. These were all bad things that created a lot of fear. However, the reverse mortgage world has changed a lot since then. Some of the things that have changed is government regulation. The government has stepped in to ensure reverse mortgages are completely different. The heart behind the regulation? To make sure elderly people are not being taken advantage of. So, some of the fears about reverse mortgages that used to be completely legit can't legally be done. Beyond that, there are different reverse mortgage programs that allow people to use the equity in their home to help them enhance their retirement. So again, a lot has changed. And in this video, my hope is to help you understand that a reverse mortgage might be something for you to consider. All of that said, reverse mortgages, they're not for everyone. First off, you need to be at least 62 years old. Second, reverse mortgages aren't for those people who have a lot of pride in the fact that they have a paid off house. If you identify with what Dave Ramsey preaches, and that is the paid off house is replacing the BMW as the new status symbol of choice, or you just struggle with the idea of debt on a house, a reverse mortgage is not for you at all. But if that isn't you, and you see financial products and services as tools to help you in your wealth building and life journey, then this might be something to consider. I just want to say this, there's no mortgage product that is evil. It's a mortgage product. It's amoral. It does not mean it's evil or it's awesome. The person behind the financial product, including the mortgage or reverse mortgage, can make the reverse mortgage evil for their situation or awesome for their situation. It's not the product that makes it bad. It's the person and their behaviors and their choices of what they're doing with the product. So what is a reverse mortgage? Well, first, I'm going to illustrate what a mortgage looks like. If this is your home loan, that is a lien position on your home, every time you make a payment, the balance goes down. And this is what we do month in, month out, until the balance goes to nothing. At least that's the hope if you want a paid off house. What is a reverse mortgage? The exact opposite. You have now equity built up into your home, and instead of making a payment is given to you each month, and instead your account balance goes up. It's a mortgage, but in reverse. The main point of this video is not to give you the full-on understanding of what a reverse mortgage is, but just enough information so that you can be wise in a conversation with your investment advisor to see if it's something that could work for you in retirement. Let's go back to the story from the beginning of this video. You're retired. Is it wise to sell investments to live off of that cash flow when the market is down? Look, your investment nest egg, it can probably handle it. It's probably okay to draw from it and have income even if the market is down. But should you keep doing it? Or should you explore other options? Because if you keep drawing from your nest egg in down markets and you have no other options for income, your nest egg could look a little bit scary. And that's the power of a reverse mortgage. Instead of feeling like you have to draw money at the times that it's probably not the wisest, you can draw money from your house, the equity that's just sitting there. And it could build back up, or at least help have a stronger foundation for your retirement nest egg. Look, it's a legit fear. In retirement, when the market's down, it's scary. So a reverse mortgage is another financial tool that can help that fear subside. The cool thing about a reverse mortgage is it's not something that you absolutely have to use. Many reverse mortgage products allow you to open the reverse mortgage, but only draw income from it when you need it. So that means if the market's up and you do want to take from your nest egg and do it in a more planned or wise fashion, that's fine, go for it. But in times when the market is down and you want to choose to draw income from the reverse mortgage, you can do that as well. Reverse mortgage gives you options. I guess here's the real problem. Most people, they see their investment account and they see the equity that they have in their home as two separate things. But really it's one thing. It's part of your one net worth, part of the assets that you own. And in retirement, you need to be wise with how you use those assets because income is at a different level. So with a wise and loving financial advisor, a good investment account, and a reverse mortgage, you can see the picture of all of your assets and use which one is best depending upon the economic time or situation that we're in. So who is a reverse mortgage for? It's for that person who gets that their assets, the equity in their home or the retirement account, are all their assets and a part of their net worth. The truth, the equity that you have in your home, even if your house is fully paid off, it is just a status symbol. It's nothing unless you actually use it. So again, reverse mortgages, they're not for everyone. But if you're of age, 62 or older, and you're having questions about what to do with your retirement account in a down market, send this video to your financial advisor. Talk to them about the benefits that you might be able to experience with a reverse mortgage. Maybe it could work out for you.